Hello, I'm Sue Saunders, founder of Business in Control. This video will look at how to run a better business financially. There are 6 ways to run a better business. Let's look at the first way. You need to build and maintain a financial model. You say, why do I need a financial model? I just have a small business. Or my business is not complicated enough. The business size or complication doesn't matter. It's the numbers that matter. All of your activities need to be profitable or heading that way. A financial model is a monthly depiction of your profit and loss and your balance sheet. It shows actual results followed by forecast results, usually over a 24-month time period. The thing about a financial model is it's unique to your business. A financial model is dynamic, responding to actual circumstances. One of the best things that a financial model does is predicts your cash flow. Here is an example. You can't predict the ups and downs unless you do the work and forecast each item in your profit and loss and balance sheet in order to work out what is the cash outcome of your forward projections. So what's the second way to run a better business financially? You need to unleash the power of your accounting system. You need to value your accounting system's information. Don't tell me that your accounting system is for the accountant or it's just for compliance. It's not. It's got a lot of information there. In fact, every one of your financial transactions find their way to the accounting system eventually. All the data about your business is stored in accounts that are classified according to their purpose, income, assets, expenditure, and so forth. When you view the accounting reports, though, you're looking into the past. You need to add on to your accounting system. You need a financial model that takes you from the past into the future. This is the mechanism you use to control and guide your business. So the accounting information is detailed and it's about the past. Here is an example of the information that comes into your accounting system. Point of sales, if you're manufacturing, your production planning, your inventory control, your purchasing, your customer relationship management. A whole lot of things go into the accounting system but it's looking into the past. You need to ask, where am I going? You say, well, what I need is a budget. That'll take me into the future. Exactly right. So these are the sorts of things that go into a budget. We're going to prepare a budget. So we have sales statistics from the accounting system. You form a detailed sales forecast based on units sold and productivity of salespersons and so forth. You have a look at your pricing policy. You may want to lower prices or raise prices. You look at the costs of products and services. If you're financing your business, you need a financing budget. You need a capital budget that tells you what you're going to buy and sell during the year. That's part of facilities planning. And lastly, but most important, your personnel budget, staff planning, and what their reward and compensation is going to be. That sounds very good. You need a budget. But a budget's not a financial model. A traditional budget usually sets the business parameters for 12 months. The actual results are compared with the budget. The variations are noted and performance ratios reported. A traditional budget is a static way of controlling your business. It provides a standard against which performance is measured. There's nothing wrong with a budget, and in fact it's proved itself to be a good idea for most businesses, but it's not a financial model and it is not sufficient for a dynamic, growing, changing small business or medium-sized business. Here we have a proper financial model that adds on to the accounting system, and it links to the accounting system via the trial balance data, which is fed into the model every month. So the forecasts that are made in the financial model have the similar inputs to a budget, but the idea of a financial model is to continuously link the past and the future. So you ask, how is a financial model dynamic? Well, the forecast automatically adjusts each month, taking into account the latest results. If the forward projection in any area of your business is not as you want it, then you revise it, and then you recalculate the cash result for future months. You take action during the month to implement any of the adjustments. The forecasting time window needs to be able to move along, and normally it would move along once every 3 months. The Business in Control model, or the BIC model as it is known, is a financial model. It is a software-based template that allows you to build and maintain a financial model for your business. The BIC model interfaces with your accounting system via the monthly trial balance. It is an add-on to your accounting system. The BIC model simplifies the forecasting process by using smart calculating algorithms. So what is the third way? The third way to run a better business is to start thinking ahead every month. Forecasting within the BIC model is simplified by aggregating accounts from the accounting system. The accounting system keeps all the detailed data that's happening in your business, but you can simplify that data for forecasting purposes. The BIC model automatically adjusts your forward projections based on the most current data. This is an important fact because there's no point in forecasting something that's not going to happen. The latest data is the most important data. It doesn't matter what the forecast was, that's the point of start. The BIC model takes the current data and continues the forecast onward into the future. Each and every month you start thinking ahead, so you need to measure your business's performance every month, and the BIC model helps you do that. You compare actual results against predicted, and that also provides a check against bookkeeping errors. These occur, believe me. Reforecast if necessary. That's okay. This is not a static budget. This is a financial model where you can reforecast as often as you require, because what you need is a prediction of the future. You want to be able to see ahead and see what's going to happen. And then you plan actions ahead of time so that during the next month you take these actions to help achieve the goals that you're seeking. So what is the fourth way to run a better business financially? The process of modeling helps you gain understanding of your business. It takes a while to set up your BIC model. You need to look at past data and forecast every line item, your accounts. However, remember these accounts, the account list in the BIC model will be less than that in your accounting system. Remember the BIC model is linked to your accounting system, so you can aggregate accounts. For instance, you may have 5 cash accounts. As far as forecasting is concerned, you can aggregate all of those into one big cash account, because really that's what you want to know for the future. The BIC model calculates up to 12 performance factors based on your forecast. 12 performance factors only. These factors become the shorthand measures that you can use to check the health of your business. As you process the current data each month and assess your performance, you begin to gain a better understanding of how your business performs. Here's an example of the results page for 1 month for our Gardens for High-Rise demonstration data that comes with the BIC model. Now you can see here there are 12 performance factors for this company. Sometimes you may not use all of these factors. For instance, if you have a service business, you won't have inventory. You're able to turn that factor off. But you can see here that all of these factors are okay. Profit before tax needs review. The gross margin is not quite as close to plan, but there are only really 2 factors that the owner of this company needs to look at for this particular month. So it is not an onerous task. He doesn't have to reforecast all the parameters that are okay. You also have a rating from 1 to 5 of each of your factors and a score that tells you how you're doing each month. So if you get all of your 12 factors with okay, that's all you have to do. You don't have to do anything because you know that your company is tracking according to plan. And what's the 5th way that you can run a better business financially? Well, you can practice scenarios on the computer first. You don't have to go through all of the stress and bother of actually happening in real life. So what it is, you don't let the business run you, you run the business. The big model allows you to control the ship. Uncertainty leads to unnecessary stress. You think ahead and decide where you want to take your business. The control that you achieve by having a financial model attached to your accounting system reduces stress because you're able to control the company better. The big model lets you try out many new ideas on your computer and not in the real world. That's the advantage of having a financial model. So you can try it out, see what the cash result will be, and do it many times. So you get, not only you gain understanding of your business, but you are able to use the model as a what-if case and see what is possible for the future of your business. Here is a business that's in control. They would be getting okays for all of their 12 performance factors. Here's a business out of control. They wanted to go up, but no, they're going out and down and across. The trend is down. Whoops, they should be reforecasting. Even something that's better than what you expect, that is just as bad as much worse than you expect. What you want to do is track along the path that you're trying to go. So what's the 6th and last way of running a better business financially? Don't be afraid of change. Change is inevitable. Be prepared to adapt. The big model prompts you to take action if things are not going to plan. You may need to change your approach and reforecast the results. Change is normal. That's why a financial model like the big model is such a useful tool. You plan ahead, check your progress, and then adapt in small, incremental steps as required to reach your goals. Remember, your accounting system tells you where you've been, but the big model tells you where you're going. The 2 are partners. They are linked, but you need to look into the future. You need to think ahead. Take action now to run a better business. Ask Business in Control to help you set up your financial model. We will guide you through the process and teach you how to better manage your business financially. Book a business review session with Sue using the contact page on this website. Thank you very much for watching this video. I hope you're enthused with the ideas presented here. Bye for now.